people in the space, we were able to determine that when we do it like that, we would leave out a large chunk of farmers, and we made it in such a way that we have basically taken a brush and painted every parish and said, if this doesn't happen for everybody, nobody gets a payout, right? We realized how unfair it was. We realized that a lot of farmers were being left out of actually benefiting from the product. So what we did was to revamp the product and change it to where each parish is treated individually. So each parish has their own trigger based off of the history of the weather patterns in those parishes. Right? So again, how did it work before? We did it by seasons. Right? So on your screen, you will see how the seasons were broken down. Right now, we would actually be in season 1 for rainfall and drought. Right? This would allow the farmers to spread their risk. Right? You could take a specific coverage for a specific season. If you don't want a coverage for a season, you would leave it out.
Hi, David.
Mhm.
You're sharing your screen? I'm not seeing it. We're not seeing it.
You're not seeing the screen? Hold on, let me
No.
see what just happened.
And not only to that, but there's a feedback, a terrible feedback.
There's a feedback. All right, hold on 1 second. Let me see what
Well,
is.
I'm not getting the
No, that's
feedback.
only on your end. We don't have any feedback. Just
Right.
need to share your screen.
All right, I'm not sure what just happened. Let me see. All right, back up and running.
Yes.
All right, awesome. All right, so before, as I was just saying, we did it by seasons, right? We had 3 seasons for rainfall and drought, and we had 1 long season for hurricane winds that took into consideration the entire hurricane season, right? What we realized is that when we left it like this, farmers were being left out. There were gaps in their policies, and there were times that they were left exposed. So what we did was we changed the entire product based off of the feedback that we got from farmers. What we did was we got rid of seasonal coverages, right? Seasonal coverages are no more. The policy now runs for 1 full year. So each product that is purchased runs for a year, right? Allowing farmers to be properly covered throughout the year without any gaps within the period. 1 second, let me just move this out. Wait, good. Right, so now, as I said before, we're now offering coverage for a full year. The triggers that were there for regions have been changed, right? After looking at each parish, we were able to change these to a lower triggers, giving farmers a higher percentage chance of actually getting a payout. Our coverages before, the payouts used to start at 5% of the sum insured. Once the first trigger is met, we were able to do away with that. And all payouts now start at a minimum of 30% of the value that was insured. Now, I'll look at each of them individually. As you can see at the top, the triggers at the top were the old triggers. And these are figures that were taken from St. Anne, right? At the top, these were figures that were only taken for 1 season. So these are the triggers that a farmer had to experience within a 4-month period for them to receive a payout. The triggers below are the new triggers and the new payout, where we're now looking at a 1-year period. So what we're really looking at is excessive rainfall. How we defined it is the amount of rainfall over the norm that the parish would experience over a 2-day period. Now, this is also looking at the entire parish. So let's say, for instance, we're in St. Catherine, and your farm is in Portmore. but you're not receiving any rain. However, if you go a little further north to maybe Old Harbor, you go up to somewhere like Colbeck, they are having extensive rain. You go further and you go to Glengarth, they have extensive rain, and Sligoville, they have extensive rain. What we would do is we would look at the areas within the parish that have the highest level of rain, and those are the ones that we would use. We would add them together and average them over the 2-day period to activate the trigger. So even though your section where you are in Portmore might not be getting any rain, other sections of the parish are experiencing the heavy rainfall. And based on that, everyone in the parish with the policy would receive a payout, regardless of the damage that is done or if they actually experience the rainfall, right? That's the beauty of a parametric product. It doesn't require you to necessarily have damage, or it doesn't necessarily require you to be experiencing that weather condition or be plagued by that weather condition. Once you're in the parish and a trigger is met, your payout is guaranteed. For drought, we're looking at your lack of rainfall, right? So what we're looking at is not that you didn't get rainfall at all. We're looking at the fact that you didn't receive the amount of rainfall that you're supposed to get over a 60-day period, right? As you can appreciate, with rainfall, we can monitor it over a couple of days. But for a drought, you really cannot use 2 days to say, okay, someone is in a drought condition. You'd have to use an extended period of time. For that, we have set it at a 60-day period. Right? So again, just like with excess rainfall, if there is a case where you are getting rain in Portmore, but everywhere else is dry, we're looking at the places that are below what the entire parish is supposed to get, and that's how we average it. So if you're supposed to get 50 millimeters of rain over that 60-day period, but instead of 50 millimeters, the entire parish only gets maybe 30, maybe 40, maybe none. That is where the drought payout would come in, right? So we're not looking at the fact that there has been no rainfall. We're looking at, I did not receive the expected amount of rainfall over the course of the 60 days. Hurricane winds is actually, to me, the easiest one to really explain, right? Everyone knows how we measure hurricane strength, right? We go from category 1 up to 5. And with last year's experience of Hurricane Melissa, I think they might need to add a category 6. But when that happens, then we will update our chart and add that to it. Now, the beauty of hurricane winds, and for me, I tell every farmer, if it is one policy that they should buy, if it is the only one out of all 3 weather protect policies that they purchase, I recommend that they purchase hurricane winds. Jamaica sits in a position in the Caribbean where we are always lined up or targeted by a hurricane. We might not directly get impacted head on. However, it either passes right through that space between St. Thomas and Haiti, or it passes right under the entire island and turn right when it gets down to Westmoreland. Or when we have bad instances like Melissa, they go down to St. Elizabeth, they wait till they get to Lover's Leap, and instead of jumping off, they climb up and they proceed across the island, causing widespread destruction, right? So before, as you will see, our category 1 payouts actually started at 5%. After going back to the drawing board countless times and looking at it, we were able to get our payouts starting at 30% now, with category 5, of course, being 100%. So using Hurricane Melissa as an example, all the farmers across the island received a payout. Every farmer that had a weather protect policy has received a payout. It's just that the degree of payout varied based on what strength the hurricane was when it affected their parish. Now, the hurricane itself does not have to make direct landfall with a parish or come in contact with the island. It simply has to pass within 40 kilometers of the center of the island for every policyholder in the island, well, in that parish, to receive a payout. So again, just an idea of the ranges, parishes, Portland, St. Thomas, St. Andrew, St. Mary, all received between 5 and 10% payouts after the passage of Hurricane Melissa. St. Catherine, Clarendon, and St. Anne received between a category 2 and 3 payout. However, every farmer from Manchester, Trelawney, St. Elizabeth, St. James, Hanover, and Westmoreland, they all received 100% payouts. And our payout times are relatively quick, right? Again, using Melissa, she was the prime example to show how the policy worked, right? 3 days after the hurricane passed, the team began reaching out to farmers. We used every means that we could based on the information we had. So we called those who we couldn't get through to on calls. We sent a text message or we sent WhatsApp to let them be aware that we're aware that the trigger has been met. We are going to be reaching out back to them to confirm the spelling of their names, and then their checks will be produced and distributed as quickly as possible. 2 weeks after their first contact, the team was on the ground in Trelawney, where we started handing out our checks, right? Trelawney received the bulk of the checks, to be honest, because that's the parish that most farmers actually signed up in, right? We handed out 24 checks, 23 or 24 checks in Trelawney on that day, with payouts ranging from the initial level of coverage, which is 50,000, all the way up to 250,000. Now, how do you apply for Weather Protect? Applying is very, very simple, right? You can apply through our website. We do have a website. I'm not sure why I'm not seeing it on this slide, but we do have a website. I will put it in the chat shortly so that you guys can have it. Or you can go into one of our offices, or you can reach out to me. I'll give my number at the end as well, and you guys can always reach out if you have any questions, if you're interested in signing up, if you're part of any farming groups in smaller communities that you would like me to come and actually do the presentation, right? We can also facilitate that. I see a hand from Mr. Henry.
Are those figures in US or Jamaican dollars?
No, these are all Jamaican dollars.
So you're saying the maximum coverage is $1 million?
No, the maximum coverage is actually how much you want to insure. We actually have farmers who have insured, well, up to US $2 million, right?
Okay.
These are just on the form for those who are signing up right now. Now, if you say to me, I have a farm, my investment on the farm is about $10 million. We can discuss that. It's just that it is a discussion a little different, because we would then have to ensure that we have the capacity to take on that risk based off of our reinsurance portfolio and the amount of people we've already have on the product. However, whatever value that you come up with, yeah, I'm pretty sure we can handle it for you.
So if I operate a poultry operation, and let's say my investment is 100 million, you guys can cover that.
That's correct.
Okay.
All right. So the enrollment form is pretty simple. The primary focus of the form, however, is the location of your farm, because a lot of us will live in Kingston, Portmore, and other areas, but the farm is in another parish. Now, if if you are to put your home address and not put the farm address, what it does is open you up to not receiving the correct payout should a trigger be met. So let's say we live in Kingston, the farm is in Manchester. Manchester received a trigger. However, Kingston didn't receive a trigger. Because of where you have noted the address as in Kingston, you would not receive a payout. Granted, we would look at it and we'd see where the error was made and we would take it into consideration and see how best we can facilitate the payout. We pay very, very special attention to where the farm address is, right? So the registration process is the completion of the form, your national ID, a government issued national ID, and your TRN. And we also take your RADA ID as well. Now, if you're not in possession of a RADA ID, it does not stop you from actually taking out the policy, right? What the RADA ID does is from time to time, there are government subsidy programs that are put out, right? Recently, at the closing of the debate a couple months ago, the minister would have alluded that the government has set aside, I think it's what, $50 million for farmers to get the first level of coverage from Weather Protect, right? That would cover, if my math is correct, 5,000 farmers across the island for them to get at least the first level of coverage. Right here, this is our price range and our policy limits. As you can see at the bottom, exceeding $1 million, we can, the client can request that and we can facilitate it. However, this is the price range as to how we cover it. So we start at 50,000 as a policy limit and we charge 10,000 for the year. These are all annual figures. I see your hand, Miss Davis. Miss Davis?
Peter Gay, you can go ahead with your question. She is unmuted, but I think she may be having some challenges.
Okay, so maybe
You hearing me now?
Yes, we're
we
here
are.
now.
Okay, good morning.
Morning.
I just wanted to clarify what you just said about the government. You're saying if you have a policy with you, they would assist with the payout as well?
All right, so how it works, right, is that the government subsidy is where the government will pay for that top policy limit that you see, the 50,000. They are paying for that level of coverage for 5,000 farmers. So all it would take, and the reason why we haven't rolled it out is that we haven't finalized how we're going to be selecting those farmers, right? We're currently going through and looking at those who have already benefited from the subsidy last year. And we are basically putting them at the end of the list so that those who have never benefited actually get a chance to receive the subsidy before we even consider those who would have already received it. I don't know what happened. The screen.
Okay.
Yeah, your presentation screen went again. It's back.
It's back. All right, awesome. Right. So let's say that you wanted 100,000 worth of coverage and you were selected for the government subsidy portion. What you would actually be paying for that 100,000 worth of coverage is actually $10,000. Why? Because the government would have paid the first 10,000. You with me so far, Miss Davis, or have I answered your question?
Phone, please. Phone, please.
Understand. Yes, I understand.
All right. Miss Carla, saw your hand first.
Carla, you can unmute and ask your question.
Hi, good morning, everyone. Just quick question.
Sure.
Your request requesting a national ID as opposed to your driver's license? I can understand the TRN and the rather just to confirm that you're a registered farmer, but what's the importance and the relevance of asking for the national ID as well?
Oh, no. When we say a national ID, we mean a government issued ID. So your passport, your voter's ID, your driver's license. All right, Mr. Henry.
Quick one. So I just want to know in terms of your price and coverage calculation, is it generally geared towards crop or a mixture of crop and livestock?
All right, here's the beauty of this product. We don't look at what it is that you farm. So you could have crop, you could have livestock, you could have a mixture, right? We're not looking at what it is that is farmed. What we're looking at is where the farm is so that we can apply the proper triggers to them.
Is it just the triggers or how it's priced? Because I'm
No,
looking at
the
this price
pricing,
chart.
these pricing are set regardless of your type of farm.
So for every million, it's 200,000.
That's correct.
So it's fair to say that if I have a $100 million farm, it's 20 million for the coverage.
That's correct. Yes. So it would be the 200,000 times the 100. That's correct. Yes.
So the cost to me would be 20 million to secure the 100 million in insurance. Gotcha.
That's correct.
Okay.
Miss Johnson, your question?
Yes, good morning, everyone.
Good morning.
I'm going back to the slide that you had on the excess rainfall, and you
Right.
said that it's going to be triggered based on some averages, right, over the normal period in the parish, over a 2-day period.
Right.
And then it does not require you to have damage. Everyone's paid. I'm a bit leery about that because if there's no damage, why would you file an insurance complaint?
All right. No. Okay.
So what I'm saying is that by doing that, you're going to limit the amount of resources you'll be able to have in the future. Shouldn't it be based on need?
All right. So I understand your question. And when I just came into the department, I had the same question, right? That's looking at it from the traditional insurance sense where you would have to assess damage. And from assessing damage, you would then make a payout based off of the damage. However, why we didn't go that route is that the price list that you see in front of you, the price versus the premium limit, it would be totally different. Because at that point, we'd have to judge each farm individually, right? The beauty of parametric insurance is that payouts are quicker. That way, the farmers are able to get back on their feet and back in the fields quicker versus us having to go out, assess damage, put things in place, send an assessor, send a valuator, justify the claim, ensure that every warranty was followed, ensure that every step was taken to minimize damage, right? What it would end up doing is costing the farmer more. So when we went with a parametric layout, it provides a quicker payout to farmers, right? It actually provides farmers with an easier and a cheaper, more affordable way to actually get the insurance, right? So what we have done is partner with our overseas partners to ensure that we have adequate reinsurance in place to ensure that we are able to pay out every farmer regardless of what might happen once it is that these triggers are met. All right, so I understand that question. I had the same question when I came into it until I got further in the back end and could understand why it is that we do it. It is to shield some of the cost from the farmers, and it is also to provide them with an affordable means of actually getting the insurance. You have a part 2 for your question, Ms. Johnson. Ms. Johnson? All right, I'm not hearing you, Miss Johnson. If you're talking, you're still muted.
Okay, it wouldn't allow me to unmute. Okay.
Oh,
So the
okay.
second part is, okay, so I get that because you're correct as it relates to all those, going out assessing, blah, blah, blah. So it would have cost you a lot of money also. So now you're getting, say, 50,000, or we take 100,000. Let's take the 50,000 coverage. And so payout would be based on the whatever happened, the disaster, 30% of that. Yes?
Yes. Right. So it
Okay.
would start, no, it would actually, if it is a hurricane, then it would start at 30% of that 50,000. Right? If it is a drought trigger or a rainfall trigger, it starts at 40%.
So drought or rainfall is 40%.
Yeah,
Okay.
it starts at
So
40.
you only get the 100% if category 5 hits you.
That's correct.
And it has to have hit the whole state,
No,
the whole parish in a
no, well, it doesn't have to hit the parish. It just has to pass within 40 kilometers of the center of the parish. So even if the
Okay.
storm is out on the sea and it's not going to make landfall at all, right? But it passes close enough that it is within that 40-kilometer radius from the center of the parish, then everyone in the parish would receive a payout.
Okay.
Mr.
Okay.
Mr.
Okay.
Okay, thanks. Mr. Henry, I
Thank
saw
you.
your hand first.
On mute. Okay, so quick one. So the premium is one time for the year, annual premium, right?
That's correct.
And what if I experience drought for 7 weeks or whatever the time period is for the drought, and then I experience extensive rainfall, and then there's a hurricane? Will
All
I
right.
benefit 3 times from the policy?
All right. So the price limits that you're seeing is for individual policies. Now, how the product is set up is that the farmers are able to choose which policy they want at what time of the year and arrange it accordingly. So let's say we're in hurricane season now, you take out a hurricane winds policy. However, come end of September, October, that would be your rainy season. You take out a rainfall policy or excess rainfall policy at that time. So you'd have to purchase each policy individual. It is not a combination of all three. They're individually priced, right?
So
Right. So if you have 100 million to
right.
insure, right, it would be, are you insuring the entire 100 million against all three? At that point in time, you'd be looking at 20 million for each coverage. Right? Now, what it would mean is that you are also able to get multiple payouts under the policy. So let's use your example. You experience drought for the 2-month period. Right? Now, say we're in July. So let's say by the end of September, you are still experiencing that drought condition and you triggered the first level of payout and you got 40% of that 100 million. You'd have 60 million sitting down as your policy limit remaining. January come around and you experience drought conditions again, and it's another 40% trigger. You'd get 40% of that 60 million. And we'll continue paying out based on what trigger is met until either your policy limit has totally run out or you've come to the end of your policy period. And
so that's for one insurance block of 100 million.
Yeah, so that's
But
for
if I pay
one
for all
factor for
three,
that. In the
if I
case
paid
of
for
all three, if all three were
Right.
met, let's say you took a hurricane winds policy, and I don't know of any hurricane coming without rain. Right? If we have a hurricane without rain, we in some serious problems. So let's say that it is a category 5 and it passed off the coast. It didn't directly impact us, but it passed within close enough range that you received 100% payout based off of the wind speed. So you'd receive the 100 million from under your hurricane winds policy. However, let us say that it was a level 3 trigger for rainfall. You'd receive 80% of the 100 million from under the rainfall policy. So in total, you would be receiving two checks or two transfers. One would be for your hurricane winds policy. The other one would be for your excess rainfall policy. And if you have a drought one in the back still sitting there, at the end of all of this event, let us say a month down the line, 2 months down the line, there's not a single drop of rain, and you experience a drought condition and a trigger is met under your drought policy, you'll be receiving payouts under your drought policy as well.
All right. So for clarity, let me just go back over.
Right.
So I have an operation. I want to insure it for 100 million. I pay you $20 million for my coverage, right?
Right.
But that coverage falls into either one of three categories: hurricane,
That's
drought,
correct.
or rain,
That's
right?
correct.
Let's say I decide to go with the drought coverage. Or is it that if I check the box for any of the three, then that 20 million covers 100 million coverage for any of the three? Or I can buy individual 100 million blocks for hurricane, drought, and rain.
Yes, so you can buy individual 100 million blocks. So you're looking at, I need 100 million coverage for rainfall, I need 100 million coverage for drought, and I need 100 million coverage for hurricane winds. You'd be paying a premium of 20 million for each of them.
Right. So I'll pay 60 million and have the umbrella for $300 million
of a 300 million coverage, correct.
Okay. And the other alternative to that now is 100 million policy, where if the triggers are met for all three, the coverage is paid on the balance from the last coverage, from the last payout. So if 100 million, let's say I got a 40% payout and we have 60 million left on it, and then there's a category 5 hurricane, the whole 60 million is paid out, which would carry me to the excess of the policy. So there will be nothing left for drought.
No. All right. So how it would work, right? Let's say you were only looking at insuring 100 million across all three.
Right.
What we would have to sit down and discuss is how would you want to split your policy limit for each of them? So let us say you wanted 40 million on rain, 40 on drought, 20 on hurricane winds.
Okay.
Each of them would have their individual policy limits and coverage. Right? So for the drought, you'd be looking at a $40 million limit. So no matter what trigger is met under drought, we would take out the percentage that we have paid you, and it would still have its own reserve policy limit for the remainder of the year under each under drought. Same thing with rainfall and hurricane winds. So each policy is separate and they wouldn't be drawing from each other to pay for the next one.
Okay, follow you.
All right. Mr. Wilson, your hand was up first. Mr. Wilson, if you're talking, we're not hearing you. You're still muted.
He'll be on shortly. There's some restrictions.
Oh, okay.
But he should be able to speak now. Mr. Wilson?
Yes, good morning, everyone.
Hi, morning.
Yes, I do follow. Oh Lord, what happened? Yes, can you hear me now?
Yeah,
Yes,
we're
we
here.
can.
Sorry about that, I lost the screen. Right, so I do follow your explanation regarding how the triggers occur and the percentages and all of that. But similar to how Mr. Gillis, you had a concern when you joined the department as to how this thing worked with the parametrics insurance. A concern came up to me when you talk about the drought, because there are some farms, and I asked the question, do you do farm visits to confirm address? You know, I know Rada will come and visit the farm to ensure that you have a farm. So my question is, for the drought thing, there are some farms who have pressurized irrigation systems and will not budget for rainfall because they have a well and they're having water throughout the entire year. You know, some of those artificial wells never get dry, so they don't really budget for rainfall if it does come or not. So I guess one would one would not really put in an insurance for the drought thing because you have water consistently. But what if one does? How does you I guess it's an ethical thing, but
All right.
the
So
question is
I understand the question. I mean, I've gotten that question a few times, right? The question basically is how do we treat it if someone has pressurized irrigation, has a well, probably has a stream running through the property. They aren't really going to be suffering from a drought condition. However, they still purchased the policy.
right.
Once they have the policy and a trigger is met, they would still receive a payout. Because
Okay.
regardless of how it works, what would happen is the condition existed. Regardless of how you have taken your steps to minimize those conditions, the condition still exists, right? And we are still going to be paying out based off of that condition existing, right? I've gotten that question a lot of times, right? Now, as it relates to like verifying the farm and verifying if you're a farmer, we work very closely with RADA, we work with Agro-Invest, we work closely with the JAS, right? So we also apply a certain level of trust to our farmers, right? Everything is done in utmost good faith. So if you come to me and you're a farmer, if we have any doubts, we can always check back with the RADA officers. Hey, which community are you in? Which parish? And then we can always pull for an extension officer and say, Mr. Wilson, him really have a farm up here, so or is something that we're going to have to really consider or look into, right? So we do work with them to verify certain things once it is that we have some red flags that have gone up. However, from my experience with farmers, that we don't normally have that type of instance. Well, not so far. I won't say it might not happen in the future where you have somebody who is unscrupulous who will try to sneak something over, but we have not experienced it so far.
Okay, that's the last question. Regarding the government support regarding the first tranche, when is
Right.
that expected to start?
All right. We are currently looking for hopefully next month, the beginning of next month. We have already put to them our considerations on how the subsidy should be distributed, right? Which is where I said to you that those who had already benefited, we suggest putting them at the bottom of the list and giving a chance to those who did not benefit before, right? So we have already put that towards them. I know my manager is to be having a meeting with the team from the ministry. I think it was either yesterday or today. So I'm hoping that by Friday, I will get a definitive answer to say, hey, this is it. We're rolling with it.
Okay, thank you.
All right, no problem, Mr. Wilson. Mr.
All right.
James.
Before we continue, David, we're gonna take Mr. James. Then there's someone that is unable to raise hand. Donald Palmer. We're gonna take him after Mr. James, and then we'll take Mr. Grady. What I need to ask you though, this part of the presentation is almost finished.
It's right there. We're at the end of it.
Okay. All right.
Yeah, that's why I was just taking those
Taking the
questions.
questions.
Yeah,
Okay.
so we're right at the end of that one. The other one is the Ahmed policy that we'll start.
All right. Okay, great. All right. So Mr. James, Mr. Palmer, and then Mr. Grady.
All right, awesome. All right, so Mr. James.
Thank you. Hello?
Hi.
Yes, good morning, everyone.
Good morning.
I have two quick questions.
Sure.
Insurance is based on two principles. One, that you put the individual back into the position they were in, not a better position than before. And secondly, that the premium is calculated based on the risk, the likelihood of the event happening. Based on the example just given, If I had a farm valued at 100 million, I could insure it for up to 300 million. And if I had a hurricane, I could possibly collect all 300 million, 100 on each risk. That seems a little bit contrary to the normal principle. And therefore, the risk of those things happening is high and premium are going to be high. So I just needed some more clarity on that.
All right. The principle that you have mentioned, and thanks for your question, and I'm sure it will bring some clarity to others as well. So thank you very much for that. The principle that you have brought up is what we'd consider in traditional insurance, where we would use the value or the value of the asset, the pure value of the asset, and we would not be putting you back into a better position, but putting you as close to where you were before the loss, right? That would require valuations, assessments, and everything else that comes with traditional insurance. The beauty of Weather Protect is what we called, it is considered a micro insurance product. Now, micro insurance products strip away most of the traditional insurance philosophy and needs, right? Parametric insurance is designed in such a way that we provide you with a table of payout, and in order for you to receive a certain level of payout, a trigger must be met. So we're not necessarily looking at putting you back in the exact position you were before the loss. We're allowing you to set a policy limit that you can necessarily afford, right? Looking at how this policy was designed and how we designed this policy, we're not only taking into consideration large farm operations, but we're also taking into consideration the very small, the micro farmers who might only have an acre or a 2 acre, who not necessarily can't go up to the high amount of premium, but can say, all right, then, you know, if it takes 500,000 for them to get up and running, but they can't go up to that 100,000 premium, they can say, here what? I can go up to a 30,000. That would put me in a position of having a possible top level payout of 150, but at the same time, it would also, if something should happen, put me in a position where I can at least get started, right? Looking back, and I've been in the industry for a while, I cannot recall ever coming across an insurance policy before as it relates to farms and weather conditions, right? I know previously you would have policies in place for chicken farmers, for the chicken houses, right? But that would fall under a property insurance policy, not necessarily a weather condition. This would only protect them really against things like hurricanes and fires if their farmhouse, if the chicken house should burn down, or an electrical damage, right? And those policies are generally very, very expensive because you have to assess it, value everything, and then charge a premium in relation to that. Micro strips away all of that, allowing more farmers and more people to be able to access the policy, not necessarily going up to the value that they possibly have on the farm, but going as close to what they can afford. Right? So, Mr. James, I understand that. And as I said to you, when I came in, looking at the principles of insurance coming from doing traditional insurance, such as motor, property, liability, and so on, when I switched over to micro, it threw me for a loop as well. Before I finally, after doing the studies and doing everything on the back end, realized that, oh, okay, so that's why we do it. All right. I think the next one was Mr. Palmer, who is not able to raise his hand.
Yes, I'm going to ask him to unmute now. Mr. Palmer, you can unmute. Not sure what's happening here. All right. In the meantime, Mr. Grady, you can go ahead. Grady?
Yes, are you hearing me?
Yes, we are.
Yes, we're hearing you.
Want to make sure I get this. All right.
Good morning.
2 questions here. The first one, do you have coverage designed for fisher folks?
Fisher folks, that mean that you're a fisher,
Yes,
you
like
go out on the sea and fish, or you have a fish.
like a man who has a fishing boat and
Oh,
has to go on the sea, and the fact that weather condition will prevent him from going to fish.
all right. Wow. Currently, no. Weather Protect does not go that far. I won't say to you that it won't happen in the future, right? The product is currently evolving, and now that you have raised that to me, I will definitely bring it back to my manager and see how best we can get something like that in place, right? What we have is in the next presentation that should only take about maybe 10 minutes, if that long, where you would see where we provide something in place where if the fisherman or the fisher folk is injured, right?
Okay.
But as to say something for the weather condition for them in regards to them not being able to go out on the sea, unfortunately, Weather Protect doesn't extend to that as yet.
Well, not just not being able to go on the sea, but both damages
and so on. Yeah,
etc. etc.
right.
All
So
right.
that's
All right.
something that I'll bring to my manager based on
Right.
your comment. Thank you for that, because
Okay.
I
All right.
wasn't
So the
looking at that.
second question, Mr.
Sure.
Gillis, has to do with the triggers.
Right.
No, what data do you rely on the Met Office to provide you with
All right, so
these data or it's the US system? I mean, weather system. Which one do you use?
All right, so we actually use both, right? It's not the US. We actually partner with our reinsurers out of Europe that allow that they have access to the satellite imageries and they present us with the satellite data, and we also compare it with our local Met Services data. Now, why we use both of them is that we like transparency. So
Right.
if a
So I asked a
farmer,
question.
yeah, man, if a farmer wants to look back at data to see if a trigger was actually met, you can request the data as far back as possible from the Met Service, right? It's just that I think it takes about 3 to 5 days, and you complete a form, you submit it to them, and within 3 to 5 days, you normally would get the information. So it provides you with a way that you're not only looking at the trigger, because once you get your policy has your trigger specified to your parish, noted in there for each weather condition that you would have insured against. Now, if you're looking at your policy and you say, boy, I had 4 days worth of rain, I wonder if the trigger was met, you can always reach out to the Met Service and compare the rainfall levels, right? So that's why we use both of them. One with the satellite imaging that will give us a more pinpoint accurate layout of the island, and then we use our local Met Service who is on the ground, who is here, who is experienced it, who has their weather stations across the island to provide us with their information as well, and then we look at the two of them.
All right. The last question here has to do with, basis risk. And, parametric insurance does not allow for basis risk. And I'm talking about risk that I might experience greater damage than my neighbor,
Right.
but we get the same payout.
Right.
How do you account for that? I mean,
All
what
right.
do you tell an insurer that we are neighbors and experience greater damage, and we might end up getting the same payout based on our coverage?
Based on the coverage, if both of you have insured the same amount, you would get the same.
Right.
See, that
Right.
is That is one of the drawbacks of a parametric product. Unfortunately, it is not a drawback that we can really rectify as such, right? If we were to do it on an individual basis, similar to traditional insurance, it would cost significantly more. So that is
When it's
one
a traditional, you're speaking to like indemnity insurance, right?
right. So if we were to go back
Oh,
to that to say, okay, let's say you were a cattle farmer and I was supposed to insure, you're insuring your farm against drought, right? You're protecting the cattle against drought conditions. What it would mean is that I would have to get a valuator to come out and value each cow. I would then have to put certain warranties in place, such as you need to have a watering station every 50 feet. Not, this is just raw example, right?
yeah,
Don't
I know.
quote me on any of it or anything, right? And from there, I'd have to set out quoting each animal. I'd have to have a vet come out and assess the animal. Okay, this one is a prime animal, going to have to have a higher rate. This one is not so much a prime animal, it gets a lower rate. And from there, you can see how if you have 100 cows or 100 heads of cattle and you're looking at one valued at $1 million and I'm charging you maybe 300,000 per head. Some may be 4, some may be 5. And then for you to receive a claim, you'd have to satisfy the conditions of the policy to ensure that the fencing was done properly. Water and sources were available. There were no ditches or anything on the farm that would cause the animal to be stuck for a period of time without access to the water. You have backup systems for irrigation and watering sources, right? There are a lot of things that would come into place for me to really give you traditional indemnity, right? There are a
Okay.
lot of things that would affect the overall cost of your traditional indemnity, right? No,
All right. Thank you very much, Mr. Gillis.
all right,
Uh,
no problem,
oh,
Mr. Johnson.
because
All right,
maybe other persons wanted to ask
yeah, man.
questions.
So
But
what
please,
I'm going to
can you
do?
just
Yeah, man.
leave your contacts in the chat so I can
All right,
make
let
further
me.
contact with you, please.
All right, no problem. Let me put it in there now. And everyone, I'm asking
Right.
everyone to take it down. You can WhatsApp, you can text, you can call me, right? As again, I'm stressing that if you're part of a farmers group or you have a group that you meet with, or anything like that, or a community where your farm is and you meet with them and they have their meetings, I ask that, you reach out, invite me to these meetings. I will come, right? The Agro-Investment team
Okay.
can tell you, no matter where it is, right? I will come, I will do the presentation, I will sit down and I will answer questions until everyone is satisfied before I even leave, right? I sign up people on spot and everything. All right, so my number is now in the chat. All right, so moving on quickly,
Somebody is asking if you'll be at Denby. GK
I
is
will.
Denby.
We're supposed, yes, the team will be at Denby, so you won't only get me, you will get my manager, my supervisor. So what I can't answer, you'll have management there to assist as well.
Awesome. All right, so please visit the GK booth at Denby.
All right, guys, so the last one I'm going to do, and it's a really short presentation, it's really quick, right? It's our GK Ahmed policy. It's a personal accident policy, right? So Ahmed it was originally designed for people who fall in the low to medium income earning, providing them with some form of medical reimbursement cover should they actually have an accident, right? So how it works is that we provide up to 200,000 in medical reimbursements. And if someone should pass away, unfortunately, due to an accident, their beneficiary will also receive $100,000, right? So On the screen, you will see how the benefits are broken down, right? And at the bottom, and I know a lot of people are going to be questioning this part of it, is that the annual premium is $4,500 per person. And that's not a typo error. That is the actual cost. It is $4,500 per person. And we provide reimbursement of medical expenses up to $200,000. As long as it is an accident. And when we say accident, we mean any and every type of accident, right? The policy is pretty straightforward. There's no pre-history. Your medical history, we're not going to ask for it. We're not going to send you to do a medical. We're not going to ask if you have any illness in your family. None of that, right? There is no age limit on Ahmed as well. We normally say it's from cradle to the grave. So if you're from 0 to 100, and if you go over 100, we'll still sell you the policy. However, you have to tell with the secret of how to go over the 100. But outside of that, you can still get the policy. We also don't limit it based on your occupation. You could be unemployed, right? You could be a farmer. You could have other little businesses, right? This policy can also be taken out for others. So you have your farm and you have your workers. If they get injured on the farm, the responsibility falls most of the time on you, the owner of the farm. You can put this in place to say if they get injured, you're able to take them to the doctor. So let me just jump back one. I like to give practical examples, right? So let's say you have a worker on the farm and he's clearing a section for you. While he's clearing that section and he's probably cutting down a tree, the tree fell the correct way, yes, but in it falling, the back end of the tree flips up and it hits him in the chest. Based on that, you had to carry him to the doctor. So you brought him to a regular consultant to check to make sure that everything was okay. And that consultant charged you $5,000. Under our regular consultations, we will reimburse up to $20,000 for the year. So you took 5 from under that. You save your receipt, so you'd pay it out of pocket and we reimburse. So you put down that receipt. After the doctor saw the patient, they said, no, I'm going to have to send them to a specialist because I'm hearing sounds on the chest that don't sound very well. So you were sent to a cardiologist just to make sure that everything is fine. When you go to the cardiologist, they charge you $20,000. Now, these are just random figures, folks. I'm not associated with any medical facility. I cannot get you the prices that I am telling you. I'm just using them as means of an example, so don't quote me on any of these figures, right? So specialist consultations, as long as they are a specialist in an area, will cover up to $30,000. After going to the specialist, they said that, boy, I need an X-ray and an ultrasound on the chest. So you go to the radiology lab and they charge you $15 for the X-ray, $15 for the ultrasound, right? Anything under radiology, MRI, X-ray, ultrasound, CT scans, we will reimburse up to $30,000. Now, after going through and getting the X-ray and the CT, the doctor is saying to you that, boy, there is a puncture. It's not a very big puncture, but there is a very small puncture in, let's say, one of the valves of the heart, and they're going to have to do a surgery. And the surgery is going to cost $150,000. Under any surgery, we'll reimburse up to $100,000. After doing a surgery, more than likely, you'd have to stay in the hospital for 2 to 3, maybe 4 days. Under hospital expenses, we'll cover up to $20,000. Now, the truth is, when you really look at a scenario like that, the only real money that you'd face out of pocket is that extra $50,000 from the surgery, where you would have had to pay $150,000, but you would have recovered $100,000. Now, let's say everything went well. The the worker is back out in the field, and one day him just swing the machete to chop something, the machete go one side and him drop down. And he passes away in the field, God forbid. And after the autopsy, they found out that it was due to complications from an accident that he had prior, up to 6 months prior. At that point in time, their beneficiary would still be entitled to that $100,000 because they would have passed away from an accident. Now, that is an extreme circumstance. It could be as simple as you're in the kitchen cooking, and while you're cleaning up the chicken, the knife slips and slices you, and you have to go to the doctor to probably get stitches, right? You keep your receipts and you submit them to us, and we will reimburse you what it is that you would have spent up to your policy limit. Right? So this is actually how the form looks. It's a very, very simple form. The first section of the form is for those who are purchasing the policy, right? As I said, you can purchase for others. So if you're purchasing it for your staff, your spouse, your children, your grandchildren, your parents, right? You as a purchaser go at the top. The second level is where you would put the details of those who you're covering. And at the bottom, the last level that says beneficiary, you'd put the person there who would receive the beneficiary payout in the event of an accidental death. The only thing that we ask in regards to the accidental death part of it, the beneficiary that you're putting in, is that it is a person over the age of 18 years, because we really can't pay to minors. Right? Then you would sign the form and date it. You would provide me with a copy of your government issued ID and your TRN, and you would be handed your policy booklet. This is a picture of what the booklet actually looks like. It explains to you the conditions of the policies. It explains to you what needs to be done in order for you to benefit under the policy and your time frame for submitting your claim under the policy. Right? Claims are pretty simple. You contact the microinsurance team, you can contact me, or you can even contact the office directly, where someone will provide you with the claim form. There is a section, hold on, let me show you. This is the claim form. As you can see, it's pretty straightforward. The first section is where you would put your information, right? Your name, your address, what happened, when you first noticed the symptoms, when you went to the medical practitioner, right? The name and address of your family doctor, just in case you went to another, a closer emergency service versus your regular caregiver, right? You'd sign it, date it, and have a witness sign and date it as well. The bottom is where the doctor would fill out, where they would say what they were treating you for. If they had recommended you to any specialists, and the full details and date of the treatment up to when they were completing the form. They then sign it and also put their practice number and stamp it, right? So you'd complete this form and you would submit it along with the original receipts to us, right? For us to put it together, process, and put through your payment. Now, if everything comes through and there is no questions, because we do reserve the right to contact the doctor to find out, if how badly was the injury, was this a genuine case, certain questions that we would ask them. If everything is good, all boxes are checked, your payment normally takes a maximum of 13 business days for you to receive your reimbursement, whether it is by check, where we'd prepare a check if that's what you prefer, or we can do a direct deposit to a banking account that you would have provided to us. So that is the end of that presentation. Are there any questions as it relates to our GK Ahmed policy?
Any questions? You can raise your hands and I'll unmute you. I see a hand.
Mr. Wilson.
Okay, Mr. Wilson, you can go ahead.
Morning still, yeah. Just a quick one. Is there any provision? I mean, you outline the steps, the scenario with the man getting hit by the tree, but then he might be in pain. I need a little relief. Is there any element for meds?
All right. So under the section that how we treat like prescriptions is under the hospital expenses, right? So if it is a case where you went to the doctor and there wasn't any severe damage, it was just like muscle damage. So you have to go get like the arthritis cream or the muscle relaxant cream, and you have to get painkillers and so on. Yes, you still submit the receipt for the pharmacy that you'd have paid, and we'll reimburse up to the policy limit under hospital expenses for that.
Okay.
Okay. Any more questions? Doesn't seem so, David. Somebody said it seems pretty straightforward. So
I mean,
I guess you're a great presenter. Very straightforward. No
I mean,
questions.
let me tell you, see, Ahmed is a pretty straightforward policy, right? The biggest challenge that we have had with Ahmed, to be very honest with everyone, is that people don't believe that it's really 4,500 per year.
Right.
Right. That is the biggest one that we get. People generally say, "Hey, are you serious?" All right. All right. I
I
see
can
two hands.
understand that question. Okay, I think
Man,
Leroy hand was up
up
first.
first.
Okay.
All right, Mr. Wilson, your next question.
Yeah, after registration, submitting your form, how soon does that become effective?
All right, so there is a buffer period of 30 days, right? And the reason why we have that buffer period is that we've had unethical people try to sneak something in that happened before they took out the policy. So we have that 30-day buffer period. However, I will say this, we do look at everything on a case-by-case basis, right? Because up to a couple months ago, I had a client who took out the policy. She took out the policy the Monday. And I think it was the next Wednesday or around that time, she actually got injured and had to use the policy, and we reimbursed her for it.
Okay, thank you.
Yeah, man, no problem. Mr. Henry.
Mine is not so much a question, but a comment that
Sure.
you're saying that one of the challenges you have is the people saying it's too good to be true because of the premium.
Right.
You need to talk to your manager and get that effect for the previous presentation. Where that 100 million should be more like 2 million or 1 million. And then
All
we
right.
can have that.
I'm going to be very honest with you. I have spoken to him about some of the pricing, and for clients who have gone over a certain amount, how we can actually get them to get a little discount or get it a little cheaper. Now, where we're having that problem is that we're having difficulties getting farmers to actually sign up and take the policies. And the
So to
reason,
spread the risk.
yeah. So the reason behind that is, and as I said, the Agro-Invest team can tell you I'm very straightforward when I talk. The reason behind that is, and we as Jamaicans really have this problem, we don't necessarily trust insurance like that. And the main reason behind a lack of trust is a lack of understanding of how it works, right? So my primary focus and what I do is I go island wide to all these small farm groups to make them be more educated about the policies, about insurance in general and how it works, so that we can get them coming on board. Because when more people are on board and the product is growing more and we're spreading the risk more, we're able to go back to our reinsurers and say, hey, see there, product growing rapidly. We need to now consider our bigger players who are investing a little more. Can we see if we can allow them smaller or discounted premiums, given that as a bigger player, they would have put certain steps in place to prevent, minimize, and, delegate the risks, right? So that is our...
I think though a part of the challenge is the category or the industry that the coverage falls in. Generally, whether it's banks or other institutions, everybody look to agriculture as high risk. And
Right.
because of that, with the calculation of your premium and stuff like that, you offset some of that because of the risk factor. But one of the reasons why you're probably not getting more buying is because of your pricing. Because when you go to a farmer and he does a calculation and say, okay, for every 100 million, it's going to cost me 20 million in coverage. I can take out an investment portfolio or something, or put that money to other work, or reinvest that money over that period that maybe give me that coverage or that or something close to a value that can restore, because you're paying up to 40% outside of a hurricane claim. You'll be paying me $60 million. So I really just need to leverage that 20 million for another 40 to get the coverage.
That's
If you
true.
understand
That
what I'm saying.
is true.
So
Right.
if they can look at the metrics, if your what do you call those people? Actuaries can look at it and, run that risk over a period of time and make the packages more attractive to bring in more people, get the government subsidiary to it, or talk to Minister Floyd and see how we can offset some of these costs. Talk to Lloyd's of London, whomever you guys reassure with, and make it more attractive, then you get more buying. Because one of your big selling point is Melissa and the payout that Jamaica got with a similar type of insurance. So it works.
All right. All right. I can tell you it is in the works, right? As I said, the product is always evolving, right? The more feedback we get, and that is why I make sure that I try to attend as much agricultural sessions as I can. I go out and I meet with the farmers in their communities, because here what? The only way we can make the product better is to hear what the problems are. And when they tell us the problem, and we say, all right, then this is how it is, and we can go back to the drawing board, that's how we're able to tweak and change the product. I can tell you, based off of this product alone, this is the third revision, right? This is the third revision of the product. To me, this is the best revision so far of the product, right? Melissa showed that the structure of the product worked. What we needed to change was the payout scales and the triggers for the other two areas to make it more affordable and make it more beneficial to the farmers, right? So we're constantly refining, we're constantly tweaking to make this the key product for the agricultural sector. All right. Before I jump to Miss Davis, I see where Miss Johnson put in the chat that the farmers don't trust it based on how it worked last year, and they received more, less than they paid more than they received back. Okay, this was from the Melissa incident, because I know this scenario here came out of Beryl, where we had really just put the product on the market and the payouts were significantly less, starting at, as I said, 5%. Now, how it works, Ms. Johnson, and I can tell you, the farmers didn't understand how the product works. And I'm not sure how much of the blame I'm going to take for that one, because for farmers who have seen me in action, I go to every meeting at least 4 months in a row. And I do the presentations, I stay there, and I will ask if they understand, if you want to sign up. If you're taking out the policy, or last year we had subsidy. Most of the farmers who are complaining are people who took subsidy, so they didn't even pay for the policy, right? But in their impression, and this is where people get it wrong, they believe that as soon as there is an event, you're going to get the full policy limit. right? Farmers believe that rainfall are getting $50,000. A hurricane pass, no matter how strong it is, are getting $50,000. And that was the basis of why a lot of them signed up. And that was something that I worked very, very, very hard to try and change the narrative, because that's the mindset that they came out of from Beryl. And when they realized that that's not how it worked in Beryl, they came into this one thinking that that's how it was going to work. And from January last year, all the way down to 1 week before Melissa touched down, I was at farmers meeting 3 days a week, every single week, explaining to farmers, yes, that's not how it goes. It has to be a category 5 to get 100%. If it is this is the percentage that you will get. No, but Miss Johnson, you're talking about the flooding. The policy is not a flooding policy. And they are aware of that. It is the first thing that I make them aware of. We don't cover flooding. Right? The policy at the time, they got 10% of the 50,000, which is $5,000 based on where they were. Right? Based on that figures, I'm thinking that these were farmers within either St. Andrew, St. Mary, Portland, or St. Thomas area. Bushy Park, St. Catherine. Right? So they would have signed up, they would have been on the subsidy, and they would have gotten a 10% based off of what condition was met, based off of what trigger was met. And for the Bushy Park farmers, what is even more surprising to me is that I wasn't the one who did that presentation. My manager came with me and did that one. Right? So he personally explained everything, and he does it better than I do because he taught me how to do it. Right? So he explained all of this to them. Everybody said, yes, they understood and they were signing up. And this is the end result. How we plan to rectify or how we plan to move forward with this is to continue to educate, right? We have to ensure that farmers understand what the product is that they're purchasing, what it is that it actually covers. Don't tell me that you understand when you really don't. You have to be open with me for me to help you, right? If you can't say to me, and that's why we're in a big forum right now. We have, if I'm not mistaken, 39, 40 people in the room, right? And based on that, there are a lot of people who won't necessarily want to ask a question, whether they're shy, whether they're just listening, but they have questions. What I move towards or what I ask is that afterwards, send me a message. Give me a call. Talk to me one-on-one. Invite me to your smaller community groups where there's maybe 10 or 15 of you. And I'll answer any questions you have. I'll have a discussion with you. I can make it better, make you understand it better. Break it down to whatever level you need me to break it down to for you to understand. You need me to come with a whiteboard and draw it and break it down. I'll do that as well, right? My primary goal is to have the product understood and that farmers understand that there is an option of insurance available, and have them understand this is how the product actually works so that there's no misconception behind it anymore. All right. Mr. Will, no, I think it's Miss Davis. I'm so sorry you had your hand up a very long time. I'm so sorry. All right, I see 3 hands. I'll take the last 3 hands before we close. And if anyone has any more questions, please feel free to reach out to me. Miss Davis?
Who? Okay, it's Miss Davis.
Yeah, her hand was up first, then Mr. Wilson, then Miss Johnson.
Okay, Miss Davis, you can go ahead.
All right. So the question was in regards to the personal insurance. So let's say you also have a health card and you use it.
Right.
So would you be able to still give the receipt to be reimbursed the
Yes.
portion that you pay out the pocket?
Yes. So how your health card would work is that most times your health card cover 80-20. right? So the health insurance would cover 80. You would still have to hold on to that 20 out of your pocket. Now, as long as it was an accidental injury, then yes, you can. All right, that's good, Miss Davis. Awesome. All right, Mr. Wilson.
Yes, can you hear me?
Yeah, I can hear you.
Okay. I like the last part of your commentary, where you plan to continue to educate the farmers so that the persons can be more aware of the product and all that. One of the thing I had a discussion when they had the farmers market out by Spanish Town with you. I don't know if you remember. But one of the thing I think you mentioned is that farmers within their local need to understand, or they're in a better position to, based on the time they are there, to know, what risk their farm is more prone to.
Right.
So some people might be in a area that is very dry. They rely on rainfall. They don't have no irrigation. Some is in an area that always windy and all these things. So they know what experiences they have on their farm. And so it would be best to zone in on those things in terms of when they're taking out a policy so that they can maximize in that area. So that was just my commentary for them to, it's not just to try and get all three and see how much them can get in terms of what they can afford, but is to really see what it is that is their main challenge on their farm and try to mitigate against it. Because if it's a drought situation, you can't grow nothing unless you have water. And if that's their main thing, they probably don't have no wind. So no waste time I insure for wind. Put everything in the drought because that's your main exposure. If breeze come and blow, depending on what you're growing, you might can recover that without the help of the insurance policy. So that is just my commentary.
Right. And thanks for that. You see, I am also a person who I don't believe I should sell you something unless you need it. So when I sign up farmers, I actually have a discussion with them while they're signing up to say, hey, what bothers you the most? Right? What is it that if something should happen, what is it that you guarantee say, yes, this is what going to bother me? Right? I always say take hurricane winds because, where we are in the Caribbean, hurricanes tend to line us up for some reason, right? Sometimes we're very blessed and lucky that they turn away at the last minute and we just get a little breeze and maybe a little rain, but we do have those unfortunate times like last year when they say, hey, you haven't been touched in a while. It's time for you to get a little. Right. So for me, I always ask the farmers and then I always advise them to, right? I always ask them to spread it. Look at what time of the year things bother you. So if it's drought and your dry season, set up for your dry season, prepare for your dry season. If it's rainfall and you get a whole lot of it, prepare for your rainfall season as well. So your drought season might be the summer, June to maybe end of August, right? But that doesn't mean that we don't have dry spells coming throughout the year. Climate change and global warming has changed our weather patterns and what we used to be able to predict with the drop of a pin. We can't do that anymore. Times when we used to get rain, we're now having drought. And times when we used to have drought, we're getting rain. And then the worst part behind all of this is that when the drought it come heavy. And then when the rain decides to go fall, boy, we hope say it's not too much, right? So based on these factors, I advise farmers, look at the history of your farm. How long have you been doing it? What affects you at what time of the year? Prepare yourself for what will come at that time of the year, right? Set yourself in a position to know that you're covered. Then when next year comes around, your policy will then line up for renewal right at when things would start. You see, now I tell everybody, now is the best time to take a hurricane winds policy. Why? hurricane season starts in June. If you had taken it out in June, you would have been come around June to June. But you're taking it out now. You're getting 1 month free of next year hurricane season before you're paying for the next one. Because June already gone and you're halfway through July. You're covered right round through and through. Right? You're looking at coming out of a hurricane season. When the policy ends, you'd already be in the middle of, or rather, you're already 1 month in next year's hurricane season. You know, God forbid something behave like Beryl and coming the end of June, going into July. At least, you know, say, I'm covered. Right? So that is how I advise farmers to look at it. That's how I advise farmers to take it. Look at what is beneficial to you. Look at what is the policy you need and take it at that time. Don't look at necessarily putting your basket out of your reach and taking everything one lick. If you can't spread it out, spread it out. There's no problem, right? We also offer payment options. Now, if you're going to take, hold on, let me jump back to the price list for, yes, let's say you're taking $1 million and it's 200,000, but you don't have that 200,000 in hand. We can break it down over a 3-month period for you to pay. We offer that option, even for the farmer who is taking a first $50,000 level. We will say, here what, pay $5,000 to start your policy and then come in next month and pay the other $5,000. The only condition behind this is if a hurricane brews on the sea and we hear about it and you have a month to pay, no matter wait the month, come in, come clear up your balance right as your ear say, yes, something is there. Right? Don't wait till your ear say it is an imminent threat. As your ear say something a farm, just come clear up your balance to make sure that you're covered. But we're making it easy for the farmers. We have payment options available, right? We will break it down as best as we can and allow farmers to be able to get coverage to protect themselves. Look, farming is a business and you have to protect the business, both the farm and yourself as the farmer. And that is why these two products, we try to sell them hand in hand. Right? Because you can take care of the farm, you know, but if something happens to you, who work the farm? Right? If you're not the personally out there on your farm and you have workers, if something happens to your workers, who work the farm? Right? So that is how we look at it. And I will continue doing my best to go around to the farming communities, meet with farmers individually, meet with the groups. I will continue to do my best to partner with even Agro-Invest. That's why as soon as they let me know, hey, we're having this, you see, as long as there's not an engagement that I have promised somebody before, I am there. Right? You guys can reach me at any time. Send a WhatsApp, send a text message, call. Right? I will respond. Sometimes the response is a little slow because I might be in a meeting or I might be driving, but I will respond and get back to you. All right, guys. So that is it for the presentation. Right? I thank you guys.
So much.
Thank
Thank
you
you
guys
so
for the
much,
time.
David. We really appreciate it. And thanks to the audience for their time. We're all of 39 minutes over.
Wow.
But everybody is still here, still being attentive. So we're absolutely grateful for that. For the persons who asked about, well, made mention that they came in a little bit late into the room and they might have missed the first part of the presentation. What we normally do, we normally check the recording to see that everything is okay first. And then we will upload it to our YouTube channel. So once that is done, I will send an email to all the persons that would have registered for this webinar to let you know that the recording is up on the YouTube channel and you can view it at your leisure. Well, with that said, David, thank you so much for a very informative and valuable presentation. I'm sure that each and every person that would have joined us today would have been walking away with some valuable knowledge and, next steps. Remember, David's contact information is in the chat, so you can go ahead, collect that, and give him a call, a text, a WhatsApp, whatever it is that you prefer. I can attest to the fact that he is very responsive. And if you have a small group, a farmers group, a cooperative, a benevolent society of some sort, and you would like for him to come and present to your group, I think this is valuable information that should be shared all across the sector. So I would encourage that you do invite him to come out and speak to your group of farmers, wherever they are in the island. Again, thank you so much to everyone that would have joined us today. We do appreciate your time, and we do appreciate you sticking through the extra minutes with us. And David, on behalf of everybody here from Agro-Invest, as well as the audience here today on this webinar, we just want to thank you for taking the time out to be here to present to us this information. We do appreciate it. And thank you so much, everyone. Do enjoy the rest of your day. All right, so this is where we'll sign off. Again, once the recording is vetted, it will be uploaded and you will get an email to notify you of same. Do enjoy the rest of your day, and thanks again.
All right, guys, thanks for having me, and looking forward to hearing from you guys as well. All right, everyone, have a good day.
All right, bye everyone. Bye.